Okay, now I think I'm going live. Let's see. Okay, VIX, I'm not worried about. The one that I really, really am getting hurt on is the E-mini or the XSP. In terms of the XSP going down. Well, let's share the screen. Share the screen. As predicted, that election definitely, man, yeah. So the one that I'm really taking a hit on is the XSP 589. I had a 584, and of course SPX is up over 100 and some points. I'm not going to freak because of the fact that on this particular trade, things kind of normalize. So I'm not going to freak because of the normalization, because markets normally normalize. Yeah, I mean, I'm definitely taking a hit on the XSP, on that diagonal, but the rest of them is not as bad. Emerging markets, not as bad. The VIX and silver. Okay, so silver is the other one. That's down to 28. Let's see what we got there for inventory. Silver. Yeah, silver and gold have taken a major hit. And so look at those deltas. 30 deltas. So we're going to tighten that up a little bit. Even though it's a December expiration. 30 deltas. Let's see. Let's roll this down. So we'll roll it down to, and again, that's just an election move. So I'm not going to really freak because of it. But it's definitely a move. It is no joke. It was down. It's 5% in silver, just like that. Bam. So we're gonna take some steam off of this, and let's see if we move it down. I moved it down to here. I mean, we're not in. Well, we're close to being. What is our strikes in silver? We're like close. We got a 28, so we're very close to being in the money. So we're going to drag this down to the 16 delta and see if it'll get filled above the asking price. And again, markets are definitely digesting Donald Trump. So I don't want to make too many rash decisions while markets are still digesting his situation. FXI, what do we got on FXI? Okay, our deltas were 12 deltas. Let's see, FXI, yeah, that's China. That's down. Okay, since this is a defined risk trade in the VIX, I'm not going to do anything. EEM, we're going to stay put on that. Deltas are kind of neutral in a lot of those. Micron, let's see, Micron. Oh, really? Do I have any rolls in Micron? I thought I rolled it. Let's close Micron. What was Micron? The cost of the trade was 130. We don't have 30% yet, but being the situation that it is, I'm just going to close this. Close Micron. Let's see. Let's just double check that because I thought I had some rolls in that activity on Micron. Unfilled activity on Micron. I have. So what did I get? 130 credit. I'll close it. Yeah, I'm gonna close it for. Yeah, I'm just gonna go ahead and close it. Just for the sake of because that one, I mean, I could stay in. It's a December trade. We don't have our 50%. but just because of the craziness. And again, markets are just digesting, Donald Trump's win. So I'm not going to get really, really crazy. Not too crazy on this, but crazy enough to say, okay, I'm just looking at that silver. Silver is definitely silver and gold got destroyed. VIX, the VIX trade is what it is. It's a December trade. It was defined risk. We are 9 deltas, so 9 deltas long. So I'm not going to really freak. The FXI trade, though, China, because of the fact that this is an indictment against China, which is what this is all about. Yeah, FXI, it really hasn't. I mean, it's not bad in terms of its delta movement. It's not like, I mean, it's down 3%, 4%, so it is a drop. But I'm not like in paranoia mode over that. Let's see what we got here. What was China? China was what? I think that was a strangle. Yeah, China was a strangle trade, and wonder why. Okay, there we go. P&L expect. Yeah, so it's still with the mountains, so I'm not going to freak. The only thing that I was looking at because of the digesting of this is moving that strike, that XSP strike, rolling the expiration to the next, and let's see what kind of credit we'll get. So if we rolled it there, that's a 61-cent credit. Let's see what we got here. We'd be turning that into a almost a vertical. So if we roll it from 5 days to, let's see what we roll it to. We rolled the expiration to the 12th. That's 24-cent credit. We rolled it here. That would be 61-cent credit and 82.84. So we'll see if we could do that and get 62 cents off of this thing. Roll it and see if we could get 62 cents of credit on this, because this thing cost us already. The trade was 183, and if we could get 62 cents off of that 183, that'll cut it down a little bit in terms of buying power or trade price, because that's what I want to do, is cut my trade price. Let's see, the VIX. Okay, that I'm not freaked out on that. I'm not freaked out on EEM because our deltas are still kind of cool in that. VIX is what it is. TLT is what it is. Let's take a look at that TLT butterfly. We had a 12-cent credit on that. TLT is down 3%. Bonds, yeah, if you saw the markets earlier, bonds were getting destroyed. And what is our deltas in TLT? We were not looking for delta neutral, but we're 5 deltas long, so I'm not really freaked out on that. But let's take a look at TLT on that analysis. And what was our TLT? Why are we not seeing any of the analysis? There we go. Yeah, so it's getting toward our wheelhouse. Remember, our 88, the 88 strike is, when it gets down there, if it got down there right away, then I would be more inclined to saying, hey, I gotta do something about this trade. Even though that if it does, it's only like a $15 loss. But the thing is we got a 12-cent credit, $12 of credit. We're still in that credit zone for expiration. Again, we're going to have to hold this till December in order to receive that pure credit. And that's bonds. And if you saw, post-election, bonds are just got decimated. So I'm going to see if the only one that I'm really pushing in terms of trying to, analyze this and get is SLV, trying to get as much credit on that, and XSP, which is literally just rolling that, we just rolled that strike to the next expiration to get, to mitigate our buying power or mitigate the cost of the trade. There we go. Okay, so we got a 61-cent credit on that. So it's a 14.13, which is, it's a $2 wide spread. and I wanted to take some of that buying power off of the XSP. So we've got, so it's 122 is our buying power, or what it's costing us for this trade. So I'm good. I'm good with that 122 on that particular one. So the 62-cent credit, it cost us 122 for the trade. So I'm not going to really freak so much on that. Let me see what else. So let's see what else we got. In terms of so that's all I'm looking at so far. So FXI, I'm not freaked on. MU, I really want to get out of that condor. Let's see if we could get out of this. Get out of this condor. Even though it doesn't give us, we're not getting our percentages. I'm just trying to get out of it just because of this election, quote unquote, things that are digesting. And we're still good in terms of our, I mean, we got our credit. He's inside the mountain. We've got our, or actually, he's definitely making profit. So we're going to try to get out of that. It's not going to be our 50%. We could still stay in, but you know what I'm going to do? I'm going to drive this up because we could still stay in Micron. I'm going to still, and if that market comes to us, then we'll take that profit. Okay, we took the profit. It was more than I thought, just a tiny bit more than I thought. So we'll take that profit off of Micron. That's closed. XSP, we rolled. EEM, no problem. TLT, we're not in that wheelhouse for only 5 deltas. FXI, we're still good with. Deltas are not freaking out. VIX is what it is. That was the trade that we had. So I'm not going to freak on VIX, and I'm not going to freak on SLV. Although I'm trying to roll that to get that credit. I'm taking the market up a little bit to see if the market will come up to us. So that's what we're looking at. In terms of new trades, now that volatility is out of this market, in other words, that VIX trade, let's look at where markets stand. So, it's basically, hey, KW. Oh, yeah, I was having fun all night watching that. Hey, Brother Will. Hotep. I was having so much fun watching these elections. And I knew that I would have some positions that went against me, especially that XSP. I didn't even know XSP got filled until I got back because I had to go vote. And then my sleep schedule's upside down, especially now that I'm drinking this green tea. I don't think it's the caffeine. I think it's the tannins in tea and coffee that really messes me up. It destroys my sleep schedule. It twists my whole body up, and my blood vessels constrict. But today's a workout day where I do my burpees. I start out with my burpees and I go into my weighted sets. But basically, what I'm looking at is this election situation. And that's why I'm not really freaked in terms of I'm not freaking in terms of what's happening in, overall. I'm not going to freak with what's happening in terms of a lot of positions, because the positions are what they are. Positions are positions. The thing that I'm more than likely inclined to freak about is, what may happen in terms of trying to sell volatility into the future. I want to sell volatility. That's and I don't know if we're going to get that volatility to be able to sell it. So then I'm gonna have to really adjust my thinking in terms of buying volatility, in terms of what volatility can be bought. So that's the thing that I'm looking at. And, because of, and I'll do this on the other channel, because the other channel I'm going in on folks, just to piss them off and scare them. And KW knows that. Both of you guys know that. I'm going into the other channel to freak them out. But I really wanted to sell volatility, and I don't think volatility is going to, volatility will normalize, because that's the most normalized situation. Volatility normally, it will normalize. So what we're doing is we're seeing a post-election freakage. And fortunately, even though I could have stayed in Micron until December, I'm getting out with my, 25% now, less than 20, about 25% now, and just reorganizing, because I don't think that, And again, I don't know. Anything can happen. I'm just taking that profit. Trade small, trade often, as Tasty Work says, and then I'm gonna look and see what I can deploy to find new trades. But anyways, let's look at their markets. So their markets, SPX is up 101. Of course, that's post-election freakage. Everybody's, it's the post-election bounce because there's no contentious because Donald Trump won. As I was saying yesterday, look at that gap. The fact that he won, and remember, gaps are meant to be filled. They normally like to fill themselves. That's just what gaps do. Gaps normally fill, and that was just huge. It's up what? 1 point, almost 2% change. That's huge. Okay, it's not like Armageddon huge, but it is definitely huge. It busted out of previous, previous demand. That area right there where that red candle was, it busted out over that. And so therefore, I'm looking at this thing more than likely to get filled in the next few months. And then therefore, because again, this is, look at the volatility on the SPX. It just literally, this is your volatility, literally sucked the volatility out of it. This red and green line are your volatility. So, we're going to sit and wait on that. Let's look at the cost of fear. And that's the trade that I had, the VIX trade. Look at that. Fear, the volatility is just on the floor. It literally, it's literally gone out of that. Because, again, Trump won. And in other words, no contentious election. Look at that volatility. Sucked it right out. And it's right where previous supply was at. So remember, I said gaps like to be filled. Look at that. You had a gap, and look, it filled it perfectly. Gaps normally like to be filled. They normally do. Volatility got sucked out of it as well. And if we look at the trade screen, we can see that, so when I first put the other trade that I was doing on the trading, we saw volatility increasing. Yesterday, I was saying volatility was getting sucked out, which meant that Donald Trump is more likely to win. But we do have, it's sucked out, 94, and then going into the future down to 56. So it's telling you, yes, that there's more than likely not going to be a contested, contention in election. The real genie in the bottle was the cost of money, bonds. That was the other thing that was really interesting. The cost of bonds. You got a 2% drop in bonds. That's nothing to shake a stick at. That's serious. In other words, inflation is on the horizon. Why? Tax cuts, supply chain issues because of China. You saw the emerging markets, they dropped. So therefore, and FXI, even though FXI didn't drop much, you're looking at a more protectionist USA, somebody that is very, very, hyper protectionist. In other words, America could come first. Mercantilism on steroids. America could jingoistic hubris on steroids. And so therefore, you're looking at, not only just tax cuts, you're also looking at bonds falling, which gives banks the advantage to lend money at higher rates and pay you lower rates. And that's what you're seeing right here with bonds. So therefore, lower savings, higher rates, tax cuts, deregulation, which means, and I wonder if FSLR, which is your First Solar, I wonder where they're trading. Because deregulation should mean that should take a little bit of steam off the solar industry. But look at bonds. Bonds just literally destroyed. That's just huge. And even though volatility is being sucked out, in terms of some of the bond markets because of this election, the thing is it's huge. If we look at the trading in terms of bonds, look at that. Volatility is just getting sucked right out of it. So you're not seeing the fear in terms of, the fact that there's going to be a contentious election and they're going to have to do recounts and hanging chads. So therefore, that's what I was looking at yesterday. And that's why I said that markets have priced in a Donald Trump win. Let's look at, again, I think either 10. I think 10 is the solar ETF. Let's take a look at 10 and see 10, 12%. Okay, look at that, 12% drop. That's, in other words, deregulation on oil and gas and stuff like that should take the steam out of like solar and stuff like that. Now, not Tesla, because I think Tesla had earnings recently, and Elon Musk Elon Musk is brilliant in terms of how he protected he arbitraged his situation. He got buddy up to Trump knowing full well if Trump gets in, first off, DJT stock, we'll take a look at that. That's always been a joke. And but the thing is that should help his Twitter, even though Twitter's not public, it should help his Twitter and hurt DJT stock to Twitter. But more importantly, he's hedging himself against, because remember, when you're looking at lithium and stuff like that, you're looking at green energy. So it's him getting a cabinet position should help Tesla, even though green energy should be getting hurt. But look at that. Let's go FSLR and see where that's at. 19% down, FSLR. Here you got a market that's going through the roof, but the solar industry is getting hurt. The green industry is getting destroyed. Why? Because Trump is in office. That's a 20% drop in FSLR. 20%. That's huge. That's huge. So Elon Musk hedged himself because Tesla should be doing good, even though green energy is down. Look at Tesla, 12% up. Why? Because Elon Musk hedged himself, being a member of Donald Trump's cabinet. I mean, that was a brilliant move of Elon Musk, even though he's a white nationalist. We know that. But that's a brilliant move. You know, it was more of an economic move it's more of an economic than a political move. I have to hand it to Elon Musk for what he did. So anyways, I mean, here you got solar industry, the green industry getting destroyed, but Tesla is doing good. Let's look at what was left of the so-called green energy of Nikola Nikola, Ikola. I know that Nikola, what is Nikola's stock? I'm trying, yeah, and you'll see where that's trading. Look at that. That's 5% down. See, again, all these other, except for Tesla. See, Elon Musk was brilliant by doing that. By getting close to Donald Trump, what he did is he said, look, folks are going to be like, yeah, okay, so Tesla's going to get some kind of deregulation. Tesla's going to be more than likely okay being a member of Trump's cabinet. But all the other stocks, they're getting destroyed. I got to hand it to him. Uranium. Uranium energy, even though, you know what? Man, I know there's a uranium ETF. Uranium ETF. Uranium's up on that, but that's a penny stock. Let me see if I can find uranium ETF, and we'll see it. We'll see what we can find. Let's see, because I know there's one that a lot of folks talk about that they love, and I'm trying to think of the real good one that I think it's, what is the name of that one that they always talk about? Folks are always talking about the uranium ETF, and I can't remember the one. I think it's URA. Yeah, URA. Let's see where URA is at. And again, a lot of these things are going to normalize. So it's not going to be the end of the world. You know, they're going to normalize. In other words, they're going to go back to where they were at. Uranium is just barely up 1%. You know, let me see. You know what? We'll do a test. Green energy ETFs. Let's see. And you best believe military stocks should be going through the roof. You know, like Freeport McMoran and stuff like that. I mean, that's what's the name? I mean, Lockheed Martin. That should be going in. That should be going through the roof. But clean energy stuff should be getting hurt, as you see First Solar getting destroyed and others getting destroyed. You know, clean energy stuff should be the ones that are getting. So let's see if we can find one. What is that? We're gonna see if we could find some with. Let's see. There's ICLN, which is a 2.1 billion market cap. ICLN. Let's see where that's trading. Oh, oops. ICLN. That's down 8%. Yeah. So these clean energy ETFs should be getting destroyed because of Trump got in. Let's go to Grid. That's another one. Yet Tesla's doing good. I'm gonna hand it to him. I gotta hand it to it. Let's see. Grid is down barely. Grid is barely down. And again, we're gonna wait and see how markets normalize. Let's see if we could get. These are like $2 billion market caps. TAN was the other one, I think. Did we look at TAN? Yeah. Tan was the one that we looked at, and I think that was the other one. That's another clean energy. Yeah, and that one's down 12%. Damn, man, I gotta hand it to Trump and Elon. Those demons. I'm telling you, those demons are serious. They're no joke. Markets are starting to normalize a little bit. That's 92, so they're starting to normalize a little bit. So it's not like all is lost. Markets are just adjusting and normalizing back to where they were at. The one that I really want to deal with is silver. I want to get that. I want to get that trade. I want that trade to be only because silver and gold tend to trend when they get hurt. If we look at SLV and look at SLV down 5%, almost down to its previous, and that's where I had my strikes. Its previous demand level. That's huge. We could look at gold. Gold, I was watching earlier or last night. Like I said, I was having fun watching these so-called elections. I was just tired because and I should be laying off this. Yep, breaking news: Elon, banks, and Bitcoin are all soaring. Investors bet on what Trump's return to the White House will mean for the economy. Look at that breaking news. Like I say, they literally know. I mean, it's not like I have a crystal ball. It's just that, hey, if you understand and understand the way that your competitors work, then you can actually get kind of an idea. Look at gold. All that buildup of and gold is literally, bam. I mean, gold is like destroyed. What is it down? $81. Holy moly. 2% down on gold. Let's go to oil. Oil is down barely 1%. So I'm not freaking on oil. It's barely down. Barely down. And what that means, again, deregulation. That's all you're looking at is oil is just barely down. And a lot of that is because I think dollar is up. Let me see if I could get a dollar chart. That's Dollar General. I don't want those. Let's go DXY if they have that. I know that what's the dollar oh come on, what's the dollar sign? Because I don't think that Tasty has that dollar sign DXY. Hold on for 1 sec. I got to go ahead and but then we're going to look for some new trades. Just to see if there's new trades out there to be had. And I'm gonna look for the dollar sign. I think it's dollar sign DXY. Hold on for 1 sec. Okay, I had to step out for a minute, pit stop. Anyways, looking at where things are at, let me see where the dollar, see if I could find it. Uh, 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 dollar. Let me see if I could find it. Let's see, dollar index. Because I know Tasty Works. Let's see. I'm trying to think what Let's see. Yeah, see, I know it's dollar sign DXY, but I don't think that they have it on Tasty Works. I don't dollar sign DXY or because I tried the dollar futures before. Uh, dollar sign DXY. Yeah, because I'm gonna try to find it because you know what, I could just do this. Um, Give me 1 second because I normally do it on Thinkorswim. Uh, I normally do it there. Uh, yeah, they don't have it. That's the only thing that kind of messes me up. I always have to go there to Thinkorswim to try to find dollar. To find U.S. dollar. Yeah, which is kind of interesting. Yeah, yeah, yeah. So I mean, this DXY is all of it. I'm just normally use DXY, and I can't. It's interesting. Yeah, so it should be DXY. Yeah. Okay. Dollar ETF. That's the one. That's the other one. I just go to the dollar ETF because that's a lot easier. Much easier. Yeah, because I'll just go to what is that? Oh, what is the one? The UUP. Let's see. No, that's oh, that what is the one? Because I normally go to I normally go to UUP, which is the bullish dollar. You know, I mean, I can go to UUP and see what's going on with that. UUP. And we could go there. Yeah, we're up 1.6%. That's huge. That's huge. Look at that. Huge. I mean that again. This is again, it'll normalize. That's why you're seeing gold and oil get destroyed. But here's the funny thing: Bitcoin is also up as well. Hold on for 1 sec. Anyways, what I'm looking at is UUP is up 1%. Yeah, brother. Well, I was muted for a minute. I was muted. Yeah. So UUP. Okay. So look at that UUP up 1.5%, as well as, I mean, Bitcoin's through the roof. I think that was 10%. Let's see where Bitcoin is at. Again, speculation. 7%. It was up like 10%. It was up more, damn near, not 10%. It was like 8% earlier. It was like 5,000. Look at that Bitcoin. That's huge, huge. Uh, let's see, volatility of the volatility. Yeah, because I asked him about this, and he said it should pull it up on a chart. So we'll see if this chart comes up. So hopefully you can still hear me now. Look at that. Volatility of the volatility is gone. Vivix is gone. But again, gaps are meant to be filled. You don't normally look at that. You don't normally see gaps like that. That means that, of course, this is an election move, and more than likely will be, it will be, it will be normalized. It'll go back. You don't normally see gaps like that. If you go back in the Vivix, the year, you know, you definitely have not seen a gap like that. So more than likely, that's going to be filled. In other words, you're going to see volatility come back, but not to the level. I mean, this is down 15% on Vivix. You don't see 15% moves on volatility. Let's go to skew. So going to skew, let's go ahead and see if we get a chart. Let's go to a line chart on this. Skew is the protection index that I've been talking about on the other channel forever. It tells you the level of protection of puts. Here's the funny thing. A lot of folks are still, skew is up a little bit. So a lot of folks are still, looks like they're buying protection because let's see, are they buying protection? Let's go to a 5-minute chart on skew. Because the higher skew goes, the more protection people buy. They're looking for markets to go the other way, to go down. So let's see. No, we're not getting a 5-minute chart on skew. Skew, okay. Although skew has been heading up just a little bit, there's a good chance that folks, that the higher this market goes, the more people are going to want to buy protection. So that's a very interesting look at skew. Let me see it. For some odd reason, I thought I'd be getting something a little bit more on skew because I got it down to a 3-minute chart, and I should be seeing a 3-minute chart. For some odd reason, I'm not seeing it on. Let's get out of a line chart and see if we're going to see it on a. You should see the updated data of skew. And no, I'm gonna go to Thinkorswim. I got my other computer up and see what we see on skew with Thinkorswim, which should give us a, yeah. So let's go to skew, SKEW. Let's see what we got on skew with Thinkorswim. It's interesting. I mean, it's almost as if folks don't want to show you that, because skew, I'm not seeing anything that I thought on a. Let's go with the daily and see if there's anything that we could see. Okay, so skew. Yeah, I'm not seeing any major fear, or no, I shouldn't say fear. Any major skew. I mean, it's been going up. It's been trading up, which means that folks are buying protection. So we'll see what happens at the end of the trading day. If they, at the end of the trading day, if skew goes up, that means that there's more protection being bought because of this market being so accelerated to the upside. The fact that it's just gone through the roof normally gives, normally tells folks that, that they want to buy protection on something. I don't know why I'm getting these spams. UPS. I don't know who this is, so I'm going to report that. But anyways, just looking at that now, let's see if there's some opportunities. I mean, all I could say is, and I'll do it on the next live stream on the other channel. Exactly, heavy option volume. GPN, what is that? There's some heavy option volume going on GPN, TRMB, KR, CRL. Let's take a look at those. Remember, we're looking for trades now. Let's go to GPN. What is that? They say there's heavy option volume, and I like option volume. Global, what is that? Global payments. Oh, look at that. It might, even though there might be some heavy option volume, I wonder where it's coming in at. I'd have to go to Thinkorswim. I'm not seeing it. I mean, look at the December strikes. I'm not seeing it. I mean, there is some volume. I mean, look at that. 4,000 here, 2,000 here. So there is some heavy option volume on GPN, at least at those strikes, on the December strikes. They're probably talking about the strikes in November 15th. Of course, it's got dividends coming in. So where's that option volume they're talking about? I am not seeing it there. I am seeing it in December. So that's probably what they're looking at. Global payments. Let's see what the chart looks like. Look at this. 3% up. That's huge. Let's go to a daily. That's huge. This thing, again, but I'm not looking at that as a trade because there's no weekly options. Weekly options means there's liquidity. And if all you see are the monthly options, that means chances are it's not as liquid, because it isn't that liquid. But look at that. Well, it's not really much. I mean, it's still ranging where it was at. GPN, that's interesting, but there's no weeklies in that. It's monthlies. So let's go to TRMB. Let's see what that is. See if we can trade it. TRMB. Trimble. I don't know what that is. Never heard of it. But we'll see if there's any. No, look at that. There's no way. It's a $70 stock. There's no liquidity. None. Look at that. No liquidity for December. Barely. Well, you do have some high options volume on the puts. They believe this thing will go down to $60. Somebody believes it'll go down there. That this thing, and again, I'd have to look at time and sales on this particular one to see if I would have to go down to the to see if I could. Oops. See if I could find what this. See again. That's probably why I have to look at. Let's see. Okay. TRMB. I don't care about uh, the watch list. Yeah, no, I'm not. I don't care about this. Uh, yeah, I would have to go to Thinkorswim because I don't normally do that over here. I don't normally do that on this one. But yeah, check this out. 60 strike is 1,000 contracts. That's huge for this stock. For with everything on the call side is literally. Let's take a look at the chart. So yeah, this has definitely got. I'm not saying it was probably a short squeeze to the upside. What is? I don't even know what TRMB Trimble is. What is it? I don't know, and I don't care. But I'm just kind of curious what it does. Overview, TRMB, quote details, or let's go to news. See if there's any news on it, because I have no idea what this stock does. Just kind of curious. That's the Nasdaq. So it is definitely software firm Trimble raises annual for Trimble up full year. Trimble expected platform science to acquire Trimble's transportation. About what is it about? Delivering solutions to enable professionals in the field, mobile workers, to improve and transform their work processes. It operates in 4 segments: building and infrastructure. Okay, so it's tech. Okay, research and utilities. Okay, interesting stock. Programming, software and programming. Interesting. Let's go to KR. KR. And that one is Kroger's. Let's go to, because Kroger's has a lot of high option volume. This has weeklies. Okay, this does have weeklies. Kroger's got earnings coming up, so that's probably what's going on. Kroger's, and I don't like to trade too close to earnings unless I'm doing an earnings trade. But there's a lot of option volume, and I think it's more than likely this earnings that's coming in. I don't see it. Let's go to December. See if there's earnings, if that's where the volume is at. December, it looks like possibly on the call side, you have this call spread right here. You got, this is definitely more than likely a call spread. And somebody is doing over here. I mean, it's possibly, because you've got an at the money, and then you've got out of the money. A lot of selling it out of the money. They're buying 229, but they're only selling for 15, so it doesn't make sense to be a call spread. Interesting to look at that. If we look at their implied volatilities, let's see. Then we could tell better if it's a call spread. Yeah, it is. Buying 29 and selling the 32 volatility. Looks like almost like a call spread. Yeah. It's almost like that's what that is. So yeah, so interesting. So we had KR. What's the next one? What was the next stock? My phone just went crazy. So the next one is CRL and GIS. CRL, but I'm not going to trade Kroger's. CRL. See if there's anything on CRL that we might. Oh, you know what? Let's take a look at. Oh, there's no volatility. I mean, no volume. There's no liquidity. CRL barely has liquidity. There is some option volume, but I don't know where it is and don't care. What is that one? Charles River Laboratories. What does it do? I don't know and I don't care, but I'm just curious. To maintain pharmaceutical and biotechnology. Okay, whatever. Let's go back to Kroger's and look at that chart. Because Kroger's is something that everybody uses. Let's look at that chart and see where Kroger's, if that's an option trade or not. Because I don't know anyone that doesn't go to a Kroger's. Most folks do shop, especially on the East Coast. I think Kroger's is more East Coast. Look at that. And they have earnings on the 29th, and Kroger's looks like Kroger's. I mean, it was up. So it's up like almost 4%. Look at that. Bam. The Trump effect. Let's go to CIS or GIS. See what we got there. I'm just kind of looking. This just came through on a Twitter, and I'm just kind of curious what they're talking about. It's not like I would trade it. I'm just kind of curious. So GIS, what is GIS? We'll wait for the data to come in. Okay, GIS is down 1%. Okay, so it's getting hurt. GIS is definitely getting hurt. What does it do? Let's take a look at the dailies. In the meantime, while we're waiting for that data, General Mills is a glow. Yeah, General Mills. Okay, yeah, food. And that should have, and that's down 1%. Bam, damn. General Mills is getting hurt, and that's not because look at that, but it's at a area of supply. Let's look. There's no weeklies though, so chances are you're not going to see huge. Volume is just meager. At least on the December strike, which is 44 days, which is in our wheelhouse. There's barely any volume. So that must be, and you got dividends coming in. No, actually, you got earnings coming in November. So that's probably where the volume's at. Yeah, 2,000 contracts at the money. That's because of, and that's at the money calls. And then, yeah, so therefore, chances are you're looking at somebody's thinking that this thing will go to $70, basically, is what it's saying. There, because that's 70 calls. So somebody's thinking General Mills is going to go up to $70, which would be so 67, 70 is right around there, because there's a gang load of calls that are at the 70 strike. There could be selling, but that somebody's going to sell. But the thing is if somebody's going to sell those calls at around 70, what would be the risk if they sold those calls at that 70 strike? Normally, you want to sell out of the money calls. So what is the implied volatility on that? So implied volatility, you're only selling a 22 implied volatility, whereas if you sold out of the money, you'd be selling like 39 or whatever. So that you would lose money, if this thing, big money if this thing went up. So chances are somebody's buying those calls, thinking that it'll go up to 70 on a $3 rise on earnings. What is General Mills? If that's an earnings trade, what does General Mills trade? It has the opportunity to go in $2. Okay, you double the ATR. So between now and November, or December, they're looking at least a $2 rise, and that could be because of earnings. So that's kind of interesting. Now let's look for some. I was just looking at that because that just came through as possible trades. Let's look at these. IB rank. Let's go from the top to the bottom. Gold is definitely, of course, because gold literally. But here's the funny thing: still down. It's going down, and in terms of being able to sell GLD. Emerging markets, we do have a little bit of an IV crush there, and that's the one that I'm going. That I have a trade on. Oil is up. You saw the market crash on oil. I shouldn't say crash, but it did get hurt. We could do USO, but we'll take a look at that later. USO, TLT. I do like the fact that volatility is being sucked out of that because that's that butterfly we're in. SLV. Volatility is definitely getting sucked out of SLV, which is kind of helping us because we do want volatility to get sucked out of there. XLU, not helping us. Look at all these volatilities. They're going down, and I want to see it green when I'm selling. There's absolutely nothing is green. In other words, volatility is getting sucked out because of this election. So I don't see on the queen, you want to see green on the queen, and I'm not seeing green on volatility, even though we do have high volatility rankings. XLU, 54.19. I definitely don't want to see that. GDX is the only one that's close, but you got 54.33. Remember, anything over the 30ish is great, but the problem with that is it's down 2% already, and a lot of that is because it's fallen quite a bit. GDX is down 3%. So when commodities go down, you'll see volatility go down, and that's why you're seeing that. EWZ, we already got an emerging market, but this is Brazil, 9% down on volatility. Even though it barely moved in terms of its price, volatility got sucked out of there. Again, the Trump effect. EWW, 9% down in volatility. And both of EWZ and EWW are not in our wheelhouse because the IV index is down so much. GDX is gold, XLE is oil or energy. 4021 is not in our wheelhouse in the index. XOP is close. Here you got XOP, it's already down 1% volatility, yet you do have high IV rank. The index is just underneath what we want to see. It's just underneath it, but it's definitely starting to go down. Okay, FXI is still, it's getting hurt. It's down again 2.5%. Semiconductors, look at that volatility. It's up 1%. So basically, volatility is down 5% out of that. So I mean, basically, I'm not really seeing anything I can actually sell. Look, yeah, UVXY is gone. That's your volatility. You know, your UVXY. That's your volatility, short term volatility futures, and that's been sucked literally completely out. Even though the IV index is up, it just tells you that, let's take a look at Donald Trump stock, because that was the one I was wanting to go long. I did that last time, but I mistimed it. It's up 5%. Okay, Donald Trump up 5%. That's huge, huge. Let's take a look at the chart. Up 5%. Look at that. And here's what's funny. Look at the bounce. Okay, it bounced back up. This is okay. This is one daily chart. When it was going up, it actually crashed back down yesterday or 2 days ago, and the market has been pricing Donald Trump going in. Volatility sucked out of that. Remember, this thing was at like IV rank of like, it was at like 100 something. The volatility's gone. Why? Trump won. No contentious election. Although, look at these. The implied IV index is still up there. It's still up there, but it got sucked out. It got sucked out in terms of or it's looking at sucking the IV out of it, and you could tell by just looking at this. Look at this right here. The green and the red are going down, which is telling you that implied volatility is being sucked out of that. Not to say that this is going to maintain. I still think that Donald Trump stock is going to fall back, just because of the Elon Musk effect with Twitter. That right now you're seeing this bounce because of everybody's so happy that Trump got in, and they're using it like crazy this morning. So I see that more than likely happening, but toward the going out into the future, plus you got earnings coming up on November 8th, and they have not been making money. Irrespective of what folks think, as far as I know, the DJT has not been making money. Okay, hold on for 1 sec. Yeah, so we'll see. And on the other channel, I got a live stream that I'm starting on the other channel here in a minute. So I'm gonna try to wrap this up and see since I don't see anything we could sell. I'm gonna see if there's something we could buy. Let's see if there's something we could buy. And on our positions, where we at? SLV, I really want that to be filled. Where we at? Okay, we're at 18. Check this out. I'm gonna see if I could go higher, because now we're at 18. Let's go to 19. We'll go to 20. See if they're gonna fill it higher. I could get filled now, but I'm gonna see if I can get filled higher in SLV. Again, things are starting to normalize a little bit. The bounce, the quote unquote post-election bounce. Things are starting to like get back to where it's not as crucial. It's not there yet, but it's starting to. It's starting to get back to normalization. So we're gonna see if we could get 19 cents, and I'm gonna just keep creeping this up and up and up on the silver trade, just to see if because again, everything right now is look at that. I mean, you see it's green. It's starting to fill that gap. I'm not saying it's going to, but it's just trying, which means I could just keep creeping it up to see if I could get filled and get more credit so I could get out of the trade and redeploy silver now that the volatility is up. Because it's definitely, or the volatility may be going back up, because when these go up, volatility on commodity stuff usually wants to go up when it goes up as a commodity. So we're going to see what happens with that. And oh, wait a minute, before I sign out, I can't see anything that we could sell yet because everything is red on the 5-day index. I mean, it's like literally, the only thing so far is gold. I already got a silver trade on it. I don't like to trade gold when volatility got sucked out of it, because it's just been. I mean, the gold's decimated. I mean, it's that's a 2%, 3% almost drop on gold, so it's been decimated. I'd rather sit on my hands for at least a day and let things normalize. So I can't see anything. That's liquid ETFs. Let's look at stocks, high option volume. Let's go to the IV rank. Let's see if there's anything. SMCI, Super Micro, that is something. Look at that, 157, 67. Oh my goodness. What went? I know there's no earnings. But what is causing SMCI to freak oh wait, look at that. Look at that. Okay. So yeah, because I don't think there's any earnings coming in on SMCI, Super Micro. Oops, I want to go to quote details. Yeah, there's no earnings coming in, but look at that IV rank. IV rank is ridiculous. SMCI. Problem is, look at the IV indexes and the IV rank is huge, but look at that. You already sucked out 2% volatility off of that. So so it's going to be one of those things. Let's go to a trade on that and see what our strangles are at. If we go to December, SMCI, we'll go down to the fence, the 16 delta, trying to populate something with some volume. It do have volume coming in. There is some volume on this, so it's not terrible. Let's go down to, okay, we'll go to 14 delta, where the expected move is at in that 14 delta. And okay, come on, populate. Yeah, come on, give me some deltas on this, because that would be the expected move. 133. Okay, there we go. Now we got some deltas coming in. Okay, the 17 delta right there. So there's a major delta skew to the upside. Somebody believes this thing is going to hit $35. 1,000 contracts in that. $2 of a $6. So we do have our third there. If I wanted to go ahead and be very safe, I would go here. So $2 basically out of 620 takes us out of harm's way there. But look at that mountain in SMCI. Let's go to the curve. Look at the mountain on that. If it went down to here tomorrow, we'd be down 485. If it went, to that tomorrow, if we went down to, we went up there, we'd be out of 485. If it went down here, we'd be out of 131. So it tells you this thing is definitely delta skewed way, way up there. So, which means as it goes up, you'll lose more than when it goes down. If it goes down from 16 to 20, 21 to 6, 20 to 16, you'd be down about $51. If it went 20 to 24, no, actually, you make more money as it's going. But if it went to our short strike, then then we'd be hurt. 20 to 30, when we go $10, we'd be down 230. 20 to 11, we'd be down about 219. So we'd be losing when we get closer to our short strike. That mountain, that mountain would hurt us. We do have, let's see where our implied volatilities are. Okay, that's 126 on the upside, 180. So yeah, there's a lot of downside skew in terms of the pricing. But if it hit our short strike tomorrow, we'd be down 127 because we could sell it higher. If it hit our short strike tomorrow on the upside, we'd be down 441 because we'd sell it a little cheaper. But I'm not mad at this. It's just as it goes up, I would have to. So you know what? Out of a 191, I'm gonna keep this in the wheelhouse, but I'm gonna trade it at $2, around $2, and I'm gonna put it up there. But I'll be backing it down. No, let's go 196. Even because it's chances are this thing is gonna normal. It's down already $7. That's 24%. Bam. Now, oops. Let's check something else out. This thing now has the ability, because of that gap and everything else, it has the ability of, and that was an earnings. Basically, I think today was earnings, so that's probably what you're seeing. You know, SMCI, Supermicro. So, because of this thing can move $8 either way, easy. Look, it's already moved 679 or 691. So I'm looking at this thing easily moving $8. And being that it's been going down, chances are it can move another $8 down easily. Because remember, we double the ATR. So if we went from 20 to 12, we'd be down. We went down to 12. Again, this thing can move $8. We'd already be down like over $120 theoretically. So we're going to sit on this because I do like the price, but I would want to get more for the bang for the buck. And that, again, that's way down here at 14 deltas, which is a 14% chance. So I'm gonna sit on this one. I think SMCI had earnings today. That's why you're seeing what you're seeing. Let's take a look at one more, and then I gotta get ready for the other live stream. Delta, look down 5%. Look at that. The only thing I see that's going up is Valet, VALE, and I don't know. The liquidity is 10 million. There's not really much. There's no the king is not there. It does have weeklies, but I don't see any. Well, let's go ahead and see if there's any liquidity on this. Let's go to volume and see if there's anything. There's a little bit, but I'm not seeing it yet. Let's let it populate a little bit. Let the thing populate. And that's a $10 stock. A $10 stock with $3, $3 spread. I mean 3 cent spread. See where their deltas. So if we went and did this, look, there's nothing here. The granularity is not here. 26 to 8 deltas. I could sell the 26 right there. Get 19. No, there's nothing there. You're not making any money. Yeah, that's a little straddle right there. There's nothing to be. There's nothing here. That'd be a butterfly, iron butterfly. That's like major risk. That's a gamble. Ballet. So, anyways, there's nothing there. I was just kind of looking at it to see. The only thing that went up, and it went up 50% volatility on that. Dang. What else? Tesla. But Tesla, we know where that's at. Let's see. Is there anything else that didn't fall in volatility? Again, we're looking at the Queen. NYCB, I've never heard of that. There's no volume, anyways. I don't know what that. Gosh, that's high options volume. All the volatility got sucked out, except for X. Okay, United States still. United States still. You have high. Everything's high in that. That's the only one that I could see that literally. The contracts are okay. It's not like hundreds of millions, but they do have contracts. Let's see if there's any liquidity in December. 81% vol. Look at that. Is there any liquidity? Let it populate. 13 deltas. We want to get to like the 16 deltas. We'll let this populate and fill up a little bit. See if there's any contracts. Look at that. There's some contracts coming in at the 11 delta. 11 delta, there's nothing. I don't see anything else around the 16 deltas, only 13 contracts. There's nothing to shake a stick at. Nothing over here for deltas. Granularity, what, 5 contracts on the 20 delta? Yeah. Okay, here we go. Here we got, what is that? 3 deltas. You got what is that? 3 Delta, you got 2,000 contracts. And somebody thinks that this thing is going to go to $55 by December. It might be because they rejected Japanese. Is what you're looking at, more than likely because they. But look at the bid ask spread, 83 113 on the 14 Delta. That's insane. If we go to here on the 20 Delta, 102 133. That's our third. I don't mind that as a third, but let's see if I were to do this. I'm gonna go a lot higher and see if the market will be nice. Let's take a look at this. U.S. Steel, it's up 5%, so that's pretty huge. That's huge. Up 5%. Again, the Trump effect. Chances are it'll go back toward, going back toward its, it went up, so volatility, again, it's a commodity. Chances are it'll normalize back to where it was at. So we're going to go ahead and trade this. Wait, before we do that, let's look at the chart. One more time. This thing can move $2.50 a day. Let's take a look at our curve. $2.50 a day to see where our skewage is. So it's pretty, if we went up to the upside and it hit our short strike, we'd be down to 217. We went to the downside, we'd be down 138. So we could sell it a lot more expensive, more skewed there. Our delta skew, when I say skewed, is how much more we would lose on one direction than the other direction, which means this is a lot cheaper up there than down here. I had that wrong when I showed you guys before, but that's what I like to look at. If this thing, the 3150 strike, so somebody believes this thing is going to move. 3150 strike, if we looked at the chart, 31 is down here, and 50 is up here, and they think that could get there by December. But I don't care. We're going to put this trade on anyways. But we're going to trade it on a ridiculous, at a ridiculous price. If we backed the expiration 1 week, 2 weeks, 3150. Come on, give us a price and see what this would be. 3150. I know we're going to get a price somewhere. We should. Okay. We went to December 20th, 3150. That'd be 216. Back it up 1 week and let's see if it'll populate and give us a price. Okay, so 147. I like this. I like this trade. So we're going to go and pull it up a little bit to where it more than likely won't get filled. And then I'll work my way down in price because I'm getting the third of what I'm looking at. We're getting a third of that. So we're going to hold on to this one. I like this. We're definitely going to use that. And we'll see if X gets filled. If X gets filled, it's even better than when I had it last time, Brother Will. Anyways, let me get ready for this other live stream. Let's see. I got to do something here real quick. Let's see. Enter. I got to get my fireplace fixed. Okay. Let's just do this. Confirm. Confirm. I hope that this does it. It says enter confirm. Let's see. Okay, there we go. I have to confirm it there. Okay. So anyways, we're seeing what, more than likely what's up. Okay, cool. Yeah, because they're coming in. But anyways, so X is the only one that I see that I could actually sell volatility in. Buying volatility is out because of the fact that even though I see volatility normalizing, the thing that I see is it's not going to normalize enough for me to be able to make money on volatility. Because even though, it is starting to normalize. If you saw VIX and whatnot, it's starting to get back to where it was at, but not where, again, you got this whole election, quote unquote election, has to digest itself at least for the next 2 days. Then you'll see markets more than likely normalize, because everybody's excited that there's not going to be court cases. And that's why you're seeing markets say, okay, there's no more uncertainty of insanity. So markets are normalizing and feeling that and getting back to square zero because of that. Anyways, I'm going to start this other live stream. Hotep.